to take a few more days, but maybe if we get enough likes on the stream, maybe I'll get my car back today. We'll see. So anyway, let's go into the markups this morning. First thing we're going to look at is the main thing I've been watching, which is GBP AUD. We're going to run through the analysis here. Why this made it to my watch list was because it was one of the things that I could easily identify the direction the TDI wanted me to trade, and I also could identify the divergence on top that set up what could have been a D2 trade. So for those of you that don't know, we trade three signals at ASFX, the A1, the D1, and the D2. The A1 is a breakout signal. The D1 is a pullback that moves in the direction of an A1, still trading in trend. The D2, which is what we're going to talk about on GBP AUD here, that's a reversal idea that we're looking to take after divergence is present, because what divergence tells us is that something is going to change. Now, that change could be moving from an uptrend into a sideways trend. It could be changing from an uptrend into a reversal and coming lower. Which of those two happens, we're not sure. But using the rest of the checklist, we can determine if it's worth taking the risk to see that reversal come lower. Of course, you never want to trade something that's going sideways. So in a situation like this, where we're looking at GBP AUD coming up from yesterday, if I zoom out, you can see strong move on all the GBP pairs yesterday, even into the New York session and end of day, maxing out ADR. I mean, yesterday, this thing moved 218 pips, 1.23%. That's massive. So today, you want to keep that bias, but also still be willing to read the chart. And if it wants to reverse, take that reversal if the entry signal presents. So let's put it into replay mode. I'll show you what I was looking at first this morning. You can see that bearish divergence I have drawn with my white lines. That bearish divergence sets up the high of day here at the Asian session as our resistance zone. We tested that zone here as we started the London session and started to move off of it. So now we have two hits to this price level of 1.8051. Let's call it 1.8050, that zone. With that zone in the way, it's going to be tough for me now, after doing just this analysis, to take it long into this zone, into the divergence high. I would like to see that broken before we catch a move. So normally I'll look to other pairs, or I'll use this divergence, if it's already under the 50 EMA, which this was, I'll use that divergence to look for D2 trades. The D2 is going to be a short idea down towards the 200 and the 800 EMA down here. The tough part about the D2, and the reason I didn't get short on this yet today, was because this TDI, you can see, was holding the buy zone. So when the TDI, the L50 in particular, is holding the buy zone, it's always telling us where this wants to move more times than not. So with it being in the buy zone more times than not, buyers are still in control, and we're going to see this thing move higher. So as the morning developed, I'm just going to turn the replay mode off now. As the morning developed, I was watching to see if it could hold the downshift. You see how the 8 and the 21 EMAs crossed right here? If it could hold that downshift and come lower. So as it came off the 50 EMA here, I started to look for risk reward. The problem with the trade this morning, why I didn't jump into it right there as it broke the 50 EMA at 5:30, was because if I did, my stop would have had to been like 38 or 40 pips up here at the high, because there's no lower high between this high and where we would look to take the entry. Now, if you measure to the 200, look at the risk reward here. It's only 1.3R. So because it's less than 2R, and because this is a reversal trade going against where the TDI is telling us this wants to go today, I didn't take the trade. If we could have had a tighter stop loss, say like this, where it was 3R almost, 2.7R to the 200, that's a different story. That's better risk reward. That could be worth taking that trade. Even if you end up losing it, at least there, it's an entry signal with better risk reward. Because I couldn't get 2R, I was stuck at 1.3, and that's with no spread. With a little spread, it was going to be like 1R. It's not worth it to me. So I just stayed flat and I watched it. On the 1 minute, if we scroll back, first thing you have to notice is this divergence here. I'm going to sync it over. Look at how that bearish 1 minute divergence happens here at that high of day zone. So that was really feeding the idea to me that if the 1 minute TDI could hold the sell zone, this would move lower. What else helped the short idea was that there was no bullish divergence on the bottom. Nothing telling me that this was going to come off the 50 as a D1, not a D2, but as a D1 in trend to see it come higher. So because I wasn't getting D1 signals, I felt that maybe this divergence was going to send us lower, and the 15-minute breaking the 50 was going to send us to the 200. But it never presented solid risk reward, and it just continued to move higher. Look at how it set higher lows and just continued to move up. So it's important to understand we're looking at the D1 potentially, but not getting that signal because RSI and price action are both rising on the 1 minute. So there's nothing to say, oh, this is a good idea to get long. So that's why I was still short biased. But because it then ends up coming higher here on the 15 minute over the last hour or so, shifting the 8 and 21 back up, I just didn't take the trade. I didn't go short and I didn't go long. The reason why you wouldn't jump in long, like I just said, is because there's no D1 here to trade up to the high of day. You can see where is it stopped right now? Right at that high of day zone. So knowing that it has resistance there without an entry signal down here at the 50, how could I go long into that high of day? There's no signal. It's just a bias that I think it has because of the TDI. So on both sides of the move here, staying flat, in my opinion, was the smarter idea. If you would have had a D1 signal here with divergence on the 1 minute to take it up to high of day, you might have been able to find good risk reward. Say you could have gotten long here with like a 15 pip stop, something like that. Up to that zone, it's 2.2R. That's not bad. You can look to take that trade for sure. And even if you were to measure out to the divergence line, it's even better, 3.2. So I think if you would have had a D1 long, you would have seen me already buying this morning. But we don't get the entry short with good risk reward. We had a signal, but not good risk reward. And then we don't get the signal long, so we have to just stay flat. If that makes sense to everybody, give me a thumbs up. If anything there was not clear, I want to make sure that we go back and explain it. But it should emphasize to you that sometimes you can have a bias and not have a trigger signal, so you stay flat. Sometimes you could have a trigger signal and a bias, but the risk reward could be off, in which case you should still stay flat. I will never understand or agree with the guys that are willing to risk 15 and then get out of their trade when they're only 8 pips in profit. That's not proper trading. Trading is always based on risk reward. If you're going to risk 15, your stop loss at 15 pips is 1R. So that means you should not be taking profit on that trade until at least 1R, probably more than that, depending on the profitability, the expectancy of the system that you're trading. Now, when you do back testing, like I teach in our back testing course, I'm going to send you guys the link for that. When you do back testing, you can prove how profitable your trading system, the rules that you're following, actually is. Now, with our systems, we're always looking for 2-to-1 because of the amount of wins versus losses that we're going to take when we really trade the right signals. We're going to win about 7 or 8 out of 10 trades, which means I only need a 2-to-1 risk reward ratio on my trades to make it profitable over the long run. Compare that to someone who's only going to win 2 out of every 10 trades. They need a 5-to-1 risk reward ratio or a 6-to-1 risk reward ratio in order to make that system profitable over the long run. So it's really about expectancy and risk reward ratio and then back testing that to prove if it's going to be something that you should be following for the long term. Let's throw you back over here. Someone said, what about gold? Definitely we'll talk about gold in a second. We're going to get there. So we're going to watch this now to see if it comes higher. I'm going to anticipate that it does. The TDI is in the buy zone. It moved up yesterday. It's now shifted up. 8 and 21 are bullish, so it's probably going to come higher. Now, if we look at GBP CHF, this also looks like it might come higher as well. I haven't taken a position here because I haven't gotten a great signal. Look at the TDI holding the buy zone, right? We've talked about this on all of my previous streams. When you have a TDI that's screaming to you the direction you should be looking to trade, excuse me, it's more often than not going to move in that direction. So with the yellow line, market sentiment, in the buy zone, this probably moves higher today. This moved higher yesterday, going through ADR. As you can see, all the GBP pairs have caught a lot of momentum this week so far to the upside. But we talked about it yesterday. Just because they're moving doesn't mean you can jump in and go long. You have to wait for a good signal. Now, James, one of the guys who trades in South Africa, he's been with me for a good amount of time now. He's a very successful trader, very consistent in the way that he follows his rules. He's been long since early this morning. He was able to get a D1 entry down near the 50 EMA coming out of the Asian session. The entry that I have marked off here does set you up with risk reward to see it come higher. ADR is 95 pips, so you've got about 2.8 R from this idea. Notice how it hasn't moved though. We talked about this yesterday as well. When we have the potential for an A1 breakout like this, if the signal is not perfect, oftentimes it will chop before turning around and going the other way. So here, notice that bar is not off the 21 EMA. And if you've taken my courses and you understand what an A1 entry is, that bar has to be touching the red 21 EMA. Like this bar is on the 21. So because the right leg was not on the 21, I did not take the entry. Now, That's saved me money so far. It's only been negative since then. We could get another move here, but again, if you look at this bar, it is not touching the 21. So it still would not be a valid signal. So this is another situation where I've got a bias. It's very clear on the GBP pairs that they want to keep moving up, but without a proper signal, we're not just going to jump into the trade. So that's what we're looking at on GBP CHF. And I'm saying that as James has been long since early this morning. So the bias is there, but without a proper signal, with no TDI cross, with a proper TDI value, I should say, and with a weak candle formation, I'm not going to be involved in something like that. So I stayed flat on GBP CHF. Now, what fed what I think some of the GA short ideas was this potential D2 idea that we see on Euro GBP. Now, I know my RSI low is up here, so you would have had to draw this line like way up here, right? There's no reason for me to do that. I'm just going to draw it like this to show you the bottom. That's what the divergence does. It shows us the level that we're looking to then hold and trade off of. So here on Euro GBP, the divergence is set in overnight. It retests that divergence going from the London session, or excuse me, the Asian session into the London session. It can't break underneath it, and it starts to pull the TDI higher. When it broke the 50 EMA right here at 4 o'clock in the morning, that can signal to you that bias is changing and that this could rise to the 200 EMA. Now, it hasn't done that. As you can see, it popped, sat sideways, and now looks like it wants to come lower. That's because the overall trend here is down. As GBP pairs move up, Euro GBP is going to move down. They're inversely correlated. So here, to see it coming lower isn't a surprise, but it is going against this D2 long idea. So I was using the D2 bias here, being above the 50, looking like it could come to the 200, to feed the potential short ideas on GBP AUD that I was looking for to see that come lower. Like I said, because they're inversely correlated, okay? Now let's move to Euro AUD. This was another perfect TDI here this morning. See how it's holding the buy zone? I like that. The problem with this trade is that it is in the Asian range up until about 30 minutes ago. These are 15-minute candles, right? You guys can see that. We always know I'm looking at the 15-minute chart. But you can see if I draw the Asian range all the way across, it has not broken out of the range until this bar pushed it out, which you would anticipate it breaks to the long side because the TDI is in the buy zone. But with that, your 800 EMA is in the way, which can definitely be resistance. I can make this a little bit darker so you could see it. With that 800 EMA right there, how could we trade long in the Asian range up to that 800 when we know it could either bounce off the Asia high like it did twice already, or it could bounce off the 800 EMA? You know what I'm saying? If you go back to the high of week so far, right here to start the week, that Monday high, it's having a lot of issues with that high as well. So just a lot of resistance in the way above it. So I wouldn't want to take long ideas into those horizontal levels. I want to wait for them to be broken before we would take a trade, and then we would need a signal. So again, the bias was clear here based on the TDI, but not worth putting any risk on. So that's why I'm still flat today. Those were the 4 pairs that I'm watching. We just had a 15-minute candle close, little pullback on GA. Let's see if this holds the 8 EMA and continues out for a new high of day, or is it going to hold this zone that we've been testing all morning? My bet would be that it goes higher overall today because the TDI is in the buy zone. That's where probabilities tell us. I'm not betting money on it. I'm just saying where my gut says it probably moves. So those were the 4 pairs that I was watching. It's important to just look at GBP USD. You can see this caught some momentum this morning at 7:15. It's a swapping TDI. It comes down into reset. So I'm not loving that, right? That's what kept it off my watch list today. But seeing that momentum there and then looking at Euro USD and not seeing any momentum at the same time tells me that it's GBP driven. The move is in the GBP pair.